Most traders loses money because of the lack of understanding between expansion and retracement. So in this video, we'll be looking at the difference between expansion and retracement and how you should use it in your trading, how it will help you in your trading. I believe after this video, you will have a better understanding that will completely change the way you see the market. Now, first of all, I want to say this. I'm using the 1 hour time frame chart, but you can see there's trends in any of the chart. You're trading 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hours, or the 1 day. It doesn't matter. It's seen in every of your chart time frame. But the only thing you have to understand is what kind of trader you are, and then what time frame are you using. Once you understand that and you know the trend in that particular time frame, it will help you to understand exactly what you're talking about. So not saying so much on that area. First of all, we can see that this market is purely in this time frame a downtrend. So we've identified that this is a bearish chart or time frame. So the next thing we're going to ask ourselves, what is the market doing? The market does one or two things in the market. Is that the market is trending, or the market is consolidating, or is reversing? So but if we got in this particular market now, we know that this chart, we are having a downtrend market chart. The market consolidating at this particular zone, then it's expanded. This is an expansion, and it retraces and is expanded again, and it retraces and expanded again. Most times traders are too quick to be in the trade. They think that they've missed a particular opportunity, so they want to be quick to be in that particular trade, and so they are going when the market has already um started expanding, and that is the wrong approach to be in the market. So the market does not go in one particular way. It have to kind of give break and rebalances itself. It's just like you driving. When you're driving your car, or probably when you're running in a race, not a competition race, probably you're taking an exercise and you are running. At some point, you have to stop to catch your breath. That's what market is also doing. The pictures you see here will also show you exactly what we are talking about, and this particular live chart will show examples of how the market is reacting. The market will expand, take out it, break structures, and retraces. Now the question is, how are you going to use this? One, you've identified which trend it is. Secondly, you identify when the market has expanded. Probably you are not in this market at this place, and the market has expanded here. Your duty is to wait for this market to retrace. And when the market expands, is the move of the market in the direction of the trend, and while the retracement is like the market returning back to balance itself or catch a breath. It has been running, and then the market wants to return to catch a breath, give opportunity to people to join, those who understand the market. And when the market is expanded, it's seeking for something, it's seeking for liquidity. And when market is retracing, it's also seeking for something. Your duty is to find out what the market is looking for. It might rebalances even to take out an old, maybe high or low liquidity. Let's take, for instance, this is a market that has expanded and it retraces in. At some point, the mistake that trader made at this retracement, they think that this market has reversed. Now, for you to understand reversal, that's where a higher time frame comes in. If we are trading a 1 minute time frame, this could be a reversal in the 1 minute or 5 minute time frame for you to get to this place or even this place. But if you are trading this particular time frame, you might be on the wrong side of the market if you think this is a reversal. So as you can see, the market retraced here and somehow continue to get to this point. It might take anybody out that joined this market at this particular time. But if you are using a higher time frame, the higher time frame might be able to tell you that this trend has not ended. So wait. That's where higher time frame comes. But in this particular class or in this particular lecture, we are trying to only explain the expansion part of the trading and the retracement part of the trading. How do you use it? Your duty is to identify the retracement leg of the chart and be part of it in the retracement. You join the market at the retracement point. And when the market is retracing, it's seeking for something, just like I said before. You can see this market expanded and then we retrace back. What are we retracing into? It might be something in the higher time frame. It can be a fair value gap. That this particular one retraced back into a fair value gap. The market could retrace. This one retrace and took out an old swing high here before getting that, before expanding again and retraces again to take out something. If you get to the higher time frame, which we are not in dealing in this particular topic, you will find out that the market is looking for something. So your duty is to find out what the market is actually searching. But the market expand, do not be in a hurry when this expansion has started already. All you have to do is to wait for the retracement leg of the market. At every point in time, it retraces and expanded. The market retraces again and expand. The market retraces again and expand. Even in this place, the market expanded, retraces again and expand. So your duty is to find out when the retracement has started. And that's when you need to join the market at the retracement point. As you can see, the images that I'm adding up here will show you exactly how the market retraces and expand if you as you're looking at it. So if you understanding this, and it will change your trading completely. Market expands, market retraces, then market continues in its direction. Remember, expansion is when market is moving in line with the market trend direction to reach for liquidity. And retracement, remember, is not a reversal. It's just price pulling back to rebalance itself, to rebalance inefficiency, and is seeking for something. Don't be part of those who make the mistake of thinking that reversals or thinking that retracements are reversal. They see price pulling back and they think that the trend has changed. But in reality, they are just trading against the expansion. Learn the markets. Learn this. It will help you in your trading. Remember, it's structure over speculation. Do not speculate. Structure first over speculation. Thank you.